All right, everyone, so we're going to get started here with Chapter 7, Setup 3, Buying the Pre-Market Pivot. Now, the pre-market pivot is similar to buying the pre-market high. It's also sort of similar to buying a pullback. It kind of combines both into one. But I want to take a moment here as we just finished part 2, which was, or Setup 2, the Break the Pre-Market High. That was a longer class. And some of these classes through this section of Chapter 7, 8, 9, 10, and 11 are going to be on the longer side because I am trying to just unload everything about each of these setups that I know for you guys. It may take you watching it a couple of times for it to really sink in. You may need to pause it because you can't do the full class in one sitting, and that's okay. There's nothing wrong with pausing it, resuming later, or rewatching it once or twice. I also don't think you need to try to fully digest every single one of the strategies I'm going to teach you. We've got about 7 or 8 in the Gap and Go chapter of Chapter 7. We've got about 12 or maybe 15 in Chapter 8 of Momentum. We've got more in Chapter 9, more in Chapter 10, and more in Chapter 11. They're all strategy chapters. So what probably makes the most sense is for you to try to focus on 1 or 2 that are similar and that you can really resonate with. And that may be one of the ones here in Chapter 7 on Gap and Go, perhaps the first pullback, because if you really understand the first pullback, you can trade that not just during, maybe pre-market or the first 15 minutes of a traditional Gap and Go, but you could also trade that on momentum a little bit later in the day. The break of the pre-market high is a perfectly good one to be understanding and studying in combination with the first pullback. The break of the pre-market pivot, this is a little bit more complex. Red to green moves, opening range breakouts start to get a little more complex. Those may not be your go-to setup. And in fact, some of these setups that I teach, I may not trade very often because, we just don't happen to see that pattern very often. My focus generally is to trade the right type of stock. And then I'm willing to trade kind of whatever pattern I happen to see on it. And, if it happens that the, right stock, the leading gapper, gives us a pivot, I'll trade the pivot. If it gives us a break of the pre-market high, then that's what I'm trading. If it gives us the red to green move, then we trade the red to green move. So more important than anything is focusing on the right type of stock. But if you're selective about your entries, then you may end up, while you're focusing on the right type of stock, say, okay, I see it just did that. It's definitely strong, but I'm waiting for it to give me the entry that I feel confident in. So just as, kind of a word to the wise, not to try to absorb all of this at the same time or try to learn every strategy all at once. Learning to trade is kind of like learning to ride a bike. There are certainly many different skill levels in learning to ride a bike, from just kind of getting your basic bearings about you and being able to hold your balance, all the way up to doing some fancier stuff. And on that note, it's kind of funny I brought this up because I actually have a compilation of videos of Uncle Steve riding a bike. And I'm going to remind you here that your opportunity right now is to try to learn to ride a bike the right way, to try to learn from some of Uncle Steve's mistakes. Oh, so what do we have here? Someone's getting ready to launch. And that, my friends, is a free ticket to the urologist. Uncle Steve, I hope you have a good visit. Learning to ride a bike, it doesn't have to be hard. Some people seem to make it a little harder than it needs to be. These folks are all doing a really good job of just that. As you're learning to trade, trying to trade stocks that are halted, trying to, well, this is a nearly vehicular homicide. There's the right way to learn, and then there's the, kind of fast and scrappy and loose way to learn. So I encourage you, I know you're getting excited and you want to run down that ramp, ride to the end of the dock and go sliding off of it. Hopefully not head first, but, actually, right the right way. But you do have to be mindful about the learning curve. That's going to hurt. He's going to be thinking about that for a couple of days. That was a mistake. He flew a little too close to the sun. Oh, this guy, he's coming down hot. This is where, there, he's going into the water. He's going for a swim. So he got himself a free swim, and that's not so bad. All right, let's get one more. Yeah, and that's another trip to the urologist. Uncle Steve's, he's a regular over there. Anyway, so trading, similar in the sense that once you get it, you kind of have it. Now, that's not the same with emotional composure. It's not the same with discipline. Discipline is a muscle. We know that. Discipline is a muscle, and it can atrophy or you can strengthen it. but the actual skill of reading level 2, the skill of seeing the chart patterns, that is a skill like riding a bike. And once you have it, you have it. Now, certainly you can get rusty if you're out of the market for a period of time and you have to freshen up a little bit. But generally speaking, I think that what I have now, which is the skill of reading charts and learning the market, I've got this, and it's in here. So you guys, your job right now is trying to convert all of this knowledge that I'm giving you into that actual skill. The process of converting knowledge to skill is practice and experience. All right. So buying the break of the pre-market pivot. So this is going to be our entry. Again, so this slide, and I'll just make my video, I'll just move it just a smidge. So I'm going to read this for you. We can visualize the pre-market pivots as being very similar to ABCD patterns, but sometimes they're just not as clean in that they've taken much longer to form than your typical short period of a strong ABCD pattern, which may be on the 5-minute or perhaps on the 1-minute chart. In any case, you will see and visualize a horizontal line on your chart, which is based on the recent high, and you'll visualize that if the stock can break that level, it should retest the pre-market highs. So this is kind of like what we've talked about with chapter 4, looking at gaps and windows. So we're looking that if we break through this trigger, looking left and up, that the next one is typically going to be the high of day. That's the logical spot. So let's see. So the entry here can be a little tricky because while you can get early to anticipate the break through this pivot, it may not be as obvious to all traders, which thus means the follow-through initially may not be as strong until it starts to squeeze and ramp higher to those pre-market highs. So this is a setup where I'm typically more likely to take a smaller starter position. So if my full position is 20,000 shares, a starter might be 6,000. So, approximately a third or maybe even just a quarter of my full size. So I take a starter, kind of dip my toe in the water. It's not enough size that I'm going to get emotional if it fails. It's not enough size that if it works immediately, it's going to be a big winner. But I'll start to kind of dip my toe in. And that'll be right at the pivot. And then adding near the nearest half or whole dollar if we start to see that strength. If we start to see big bids come in, we start to see the green on the tape. Now, in a cold market, I may avoid this setup entirely. In a hot market, on a stock that's the leading gapper with a low float, under 10 million or even under 5 million, in the 2 to 3 million range, that could be when I will trade this more aggressively. So if that's our entry price or our entry point, again, more detail and more context will come when you see more examples. But this is essentially, that's that horizontal line. We look for the break of that level and then a move back to the pre-market high. Then our target is a retest of high of day, but expecting a surge through high of day would only be common in a hot market. What's more common is that we double top at the high of day, right? So it comes back and then we hit that level. So this is a bit more of a base hit type of setup, which is, again, it's not the one I'm going to talk about first. I talked about the first pullback and the break of the pre-market highs first because those are the most common. They're also the ones that I think for me produce the bigger winners. But this one can work in a hotter market. And we just have to acknowledge that that period of long consolidation below the pivot already indicates, a little bit of weakness, that it just kind of didn't open up as much as we wanted. Now, the risk factors on this, and the biggest concern is that it's already shown some of that weakness. Like I just said, it's already stair-stepping down a little bit. If the news was really so good and traders were really so excited, it would have just, ripped. Maybe on the first pullback it would have gone, but it's already kind of started to struggle a bit. So the stop loss here is the low of the last 5-minute candle or arbitrary 5, 10, 20 cent stops. Again, knowing that arbitrary stops can be harder to manage risk on because you have to have the willpower to hit the bid, even though it might still technically look good. Profit targets, 10, 40, 10, 20, 40 cents are fine. As with all gap and go trades, the breakout or bailout approach is important, meaning if we don't get pretty immediate resolution and it starts going the wrong way, you usually just want to jump right out of that trade. And I may simply exit and wait. I may simply exit versus wait for the stock to come all the way back down to that technical support level. So if it starts to not look right, a lot of times I'll just say, you know what, I'm just going to jump out of this. I can always get back in. It's a very common gap and go strategy, I would say, but and it is a lot like buying a break of a pre-market flag. So here is a chart example, and I'll move my camera up just a little bit. So the pre-market high here is $7.50. Now the pre-market high is also a $0.50. So we kind of have two setups here. It's psychological resistance of the $0.50 and it's the pre-market high. However, at around 8 a.m., it hit a high of about 740, pulled back down to about 695, and then curled back up here to about 730. So I would say, looking left and up, that if it can break this level here, then we look for it to break this level here, and then immediate move to 750. So these are both pre-market pivots. Now the first one is also kind of like a first pullback, and you can see that this is a lighter volume stock. Perhaps this setup was even more common at a time when we just generally had less volume pre-market, but and traders, that was it wasn't necessarily weakness, it was just there wasn't as much volume. But here you can clearly see it breaks that level and it surges up. Now, this is a red candle, but that doesn't mean that that couldn't have been a profitable trade, entering here, adding here, and taking profit on the move up to 770s. Selling as it comes back down, and then it did come back up, but I would have a hard time wanting to trade that given that that first candle was red and with high volume. Here's another example. This is very similar, and I showed you the same example as a break of the pre-market high, but in fact, technically, this is a bit of a pre-market pivot here because the actual high is back up here. Now, yes, this was after hours, but it's so similar. You could say break of after hours high, pre-market high. A lot of people would have just drawn the line there, but in fact, an early entry here at 320 would have made sense. Here's another one where the actual pre-market high was a little bit higher up here, but we had this pre-market resistance at 277. Notice it comes up and hits that level to the penny and fades. Comes up and hits that level again, almost to the penny, and fades. So that level is in play and other traders are watching it. And then here at about 9:45, it breaks through that level, 277. It pops up to 3. Notice the doji here. That was one of those moments where it was straddling that whole dollar. It broke above it, then it came back down below it. And then it surges through 310, 315, up here into a halt over 350. It opens high. It flushes down. The dip gets bought up, and it rips back up to the high of 4. Straddling now $4. So you can see how it's above 4, then below 4. So it's straddling that level, sideways consolidation, then it breaks and grinds higher, topping tail, flushes down, bounces off the low, rips higher again, pull back a little higher, and this is starting to get a bit choppy here. So the cleanest setup was definitely down here at 277, and then as it started to get higher, it started to get a little choppier. And notice the divergence of volume. Peaking volume on this candle on the halt resumption where it dipped and surged back up, and then declining volume as we get a little bit more extended. Here's another one where the pre-market pivot was 227, where the pre-market high was up here around 245. So the pre-market pivot right there provides us the entry, and look, right at the open, it surges up and hits that level twice, and then it breaks over it and squeezes up to the 60s area, pulls back, first 1 minute candle to make a new high, false breakout, back down, and then here surges back up. When it does a false breakout and then surges back up, I don't always buy as it surges back up because it's hard to trust it. I mean, to be honest, it's already given me the red flag. So those ones I just don't always like to go for, but you can obviously see in this case that it did work. All right, pre-market pivot here. So the pre-market high is up around 8. The little pre-market pivot here is about 750. It opens and sells off hard. It curls up, it hits this level, but it can't break it. And you might even have been able to draw, I don't know if you quite could have had a descending resistance line that this tapped, but maybe almost. And then here it surges through 750, which is the $0.50. So of course that's psychological level. And from there it rips up very quickly over 8, pulls back, pops up back through 8, all the way to 9, pulls back kind of dramatically, actually breaks below our volume weighted average price, then curls back up, goes back below it, then starts to rip up. First pullback right here at 12:30 ends up working. Second pullback here also works. But, that's a little later in the day. Those are more of a traditional momentum trade. Pre-market pivot on this one is 260. The pre-market high looks like it was about 277. Opens, squeezes right through 260. Why wait for the break of the pre-market high when we have that clear pre-market pivot? So the knowledge of a pre-market pivot will help you better understand whether or not you should be trading the pre-market pivot or the pre-market high. Because if there is an obvious pre-market pivot, then that's what we would want to be focusing on probably first and foremost, and wait for the pre-market highs to come to us a little bit later. I'm just going to pull my desk a little bit away here. Let's see if I can do this carefully without knocking anything over. Oh, I knocked something over. Okay, so I just wanted to try to get the camera a little bit away from that bright light. It's like almost invariable that I can't move any of this without something coming a little bit loose. One of my monitors jiggled just enough that it flashed all of them. Anyways, that's fine. It seems like we're still good. Okay, so buying to break the pre-market high. We saw that on BOSC. Here's another one. So can you see that that's that pre-market level right there at 8:30? Now on this one, it's also so bright outside. I'm gonna put down my shade just a little bit because it's like killing me. Usually I love the bright light, but just that glare off the snow. Okay, that's actually quite a lot better. It's easier on my eyes. Okay, so and the lighting looks maybe a little bit better. I don't know. My hair looks bad, but that's okay. So, okay, looking good. All right, so 314. All right, so that's our level right there. So we actually ripped up here early pre-market. Then it pulls back. Then it curls back up 314, consolidation, breaks down. And so now at the open, we know the break of 314 is the level that makes sense, right? If we can break through that level. All right, so it squeezes through 314 and surges up to 350 and it halts going up. Great. Then it opens and surges up to 4. It can't hold that level and it reverses and comes back down. It actually halts going down. So, you know, one of those stocks that's just very wild. Okay, so consolidation right here. That's the pre-market pivot. Breaks it and starts ripping up. Now, in this case, I feel like we've looked at this stock before, but looking left and up, you know, we start to say, well, what's the possible target if this goes higher? It surges up here, it drops back down, then it rips back up. And notice this price action right in here. That price action right in there. And let me just see. Let's see. Oh my gosh. Okay, let's try this. Check, isn't that cool? All right, so that right there. So it's below VWAP. It breaks above it, and right there, see that? That is a 1-minute micro pullback as it broke over the VWAP. And then from there, it surges up. It squeezes higher. So that's what we look for. Now, that's a break of VWAP setup, which is, that's not what we're talking about right now. The entry we're talking about right here is the break of the pre-market pivot, which was at this level as it surges higher. So that pre-market pivot, as you can see right there, was, in this case, let's see, it was about looks like 306 or something like that. All right, so in this case here, this one has a pre-market high right here. It pulls back, it curls up, and so that spot there becomes the pre-market pivot right there. Okay, then as it curls up right there, it breaks that level. So our entry is on this green candle as it's breaking the high of this red candle. And then it surges up into what? A halt going up. Now, how can I tell that that's a halt going up? I can tell that that's a halt going up because the candle closes at the exact high, and then the next candle is a gap higher. So for me, that makes it very easy to recognize that this is actually a halt going up. One halt and second halt going up. Halt going down, second halt going down, and then rips back up into another halt going up, a second halt going up, another halt coming down. Again, sometimes these lower price stocks, they're on the cheaper side, and so they halt faster. Okay, so this is a nice example here. We've got our pre-market pivot, which is right here. So we've got our pre-market high, which is right up here. Then we've got the pivot, which is right there. It curls, and as it breaks that level right there, that's the spot that we like. Now let me just back this up for a second. I'm just gonna try to make this window a little bit bigger. So this is what we're looking at. It's the line is 422. So right at the open, it breaks through 422 and squeezes through that level right up to the high 475 and continues higher. All right, so now we've got a couple live examples. So let me turn off the magnification for 1 second, and let's just grab a couple of these examples. Now, I'm really doing this for Uncle Steve, who kept complaining about losing his reading glasses. So let's see. So this is for Uncle Steve. All right, so we're zooming in here, Uncle Steve. We're going to press the play button way down here. Okay, there's the play button. Now I'm going to go full screen over here. Okay, we don't want to lose Uncle Steve. Okay, So let's see. Zoom level, turn that down. So we're looking at CODA here. It's the time is 9:23. It looks like. I don't know. This is having a hard time up there. But we're going to jump ahead to. See, I'm going to make the lens a little bit bigger, and we're going to jump ahead here. I'm going to just deactivate this for a second. So we're going to jump ahead right to about the open. Okay. All right, so CODA, it's gapping up 110%. It's easy to borrow, but gapping up 110%. The pre-market pivot, the pre-market high is way up here at about 760, but it looks like we're starting to get a little bit of a, oh wait, which one am I going to be focusing on here? MDGS or CODA? So I've got two stocks I'm watching at the same time. Okay, so on a day like today, here's the thing. MDGS is up 386%. This is the one that we really want to be focusing on. This is the bigger gapper. Now CODA's not bad, but it's easy to borrow. So maybe an issue. But MDGS is also really light on volume. However, it's 380%. It's the leading gapper in the entire market, no doubt. It's a big gap. So MDGS has a pre-market high up here in the 90s and a pre-market pivot right here about, it looks like in the 50s. So the bell rings, and on this one, I started to jump in pretty darn quick. So let's look at this. So light volume, but up 400%. Okay, well, I gotta go a little further forward. Okay. All right, so you can see I jumped in, I'm long. So what are we watching? Right here, we're watching the level 2, we're watching the tape. So initially on that trade, I jump in and I jump out. Let's go back, let's deactivate this. Let's go back just a second here. So here's the open, and we're gonna go right into a halt. So here's the open, and it opens. The pivot was about 67. Now the pre-market high was 710. And so this ends up being a long right here with the order at 7, buying immediately 79 and 94 to anticipate the break of the pre-market pivot and 7. It's the leading gapper, so I'm thinking that's probably going to be the strongest one. $7 right here on the ask. Is it going to break 7? I'm in at 89. There's 724. I take a little off the table there. No, sorry, I'm adding on this. Full size up here, up over 10,000 shares, but it looks like I added, then I took a little off the table. Again, I don't have the halt level identified here with red, which means at this point I probably wasn't aware of it. So I was just taking a little profit as it seemed like it was hesitating here. So I might have thought, oh, is there a hidden seller here? What's going on? And then, oh, wait, it's starting to stack up. That's the halt level. So you can see how big of a difference it makes in your trading, knowing about the halt level versus not knowing about it. As a trader, if you're on E-Trade or Ameritrade and you don't see those halt levels, you're kind of flying blind. I mean, if you're trading these stocks at least, you just don't know where those levels are. That, for me now, looking back at how I traded these before I knew about it, I traded them so much differently. Now, as I can visually actually see what the halt level is, that's often a profit target, and or I hold into the halt or even add thinking gap higher on resumption. So this halts into 756. Granted, this is light volume, but high relative volume. Okay, so let's move forward here. We're going to be halted for 5 minutes. So we're going to move forward to about, let's see. Looks like there was a quick trade on something else there, but we'll just keep going forward. So we're looking for resumption. So this is showing 760, 830, 834. It looks like we're going to gap higher on MDGS. 772. Resumption here. The halt time was 9:30 and 33 seconds. Resumption is going to be in about 15, 16 seconds. You know, Uncle Steve didn't wish me happy birthday last week, and I thought, you know, maybe it was because he was so upset with, you know, how maybe he was in, I mean, I don't know, maybe he was in the trauma center because of how hard he's been burned. He keeps getting burned. Someone get out the ointment because he's getting burned. Okay, here we go. So was that what it was, Uncle Steve? Were you in the hospital and you didn't tell me? Because if you're in the burn center, I'd want to know about it. All right. So here we go. There's resumption. So let's see, he's having a terrible week. Oh, right, he was at the urologist. So 697. So let's watch the resumption here. Here we go. Okay, there we go. So 805 by 808. It opens high. So again, that was the gap up, open higher. There's 801. There's 835. There's 834, 840, 850. The next halt level is at 1008. I see that now, but I didn't see it at the time. 850, 879, 868. So now I'm looking for a 1 minute pullback. But initially this trade was a break of the pre-market pivot and or break of the pre-market high. I mean, they both kind of occurred almost at the same time. So now possible dip trade, hands on the buy button right here, looking for the break over 850. Do I see green on the tape? Something that's telling me people are stepping up to buy the dip? Are people buying the dip? There's 825 by 16. Now spreads are tightening up. Sometimes when spreads start to tighten up, that can be an indicator that we're getting ready to break out. Okay, there we go. There's 77. Now I took a little off the table into that breakout. You know, this is a red candle on the 1 minute. We've got a little bit higher risk that it's a possible false breakout. It's a little bit of a double top there. There we go. There we go, 932. So I ended up adding for that break through that level. Now I'm in at 860. It broke through 9. I probably should have taken some off the table, but in this case, I'm kind of starting to swing for a bit of a home run. You know, I'm starting to step up and get a little more aggressive. So I'm thinking, all right, well, hey, it's up 570%. Maybe we do see that move up to 10. So there we go. I add for the break of 9. There's 932. That's awesome. 917 on the bid. Next place, where's the next place I might consider adding on this? Now, I'll remind you that, you know, we haven't gotten into adding at half dollars and whole dollars in terms of strategy, but the next place I would be thinking of adding is, as long as it holds 950. Well, I'm looking for the move up to 10. And you can see how quick and how fluid some of these trades are, trading the tape and seeing as it's moving higher. So right now, nope, not liking that. It's dipping below 9 by quite a bit, 30 cents below 9. So now I'm not liking that, but this is where these stocks start to get pretty volatile. Now it's back at 901 by 904. Now we're back to a tight spread. If we break over 910, that might be the indicator that we're going to retest those highs. If we break below 70, we might be going down, and we're on the lower side of that range right now. There's 94, 95. There's green on the tape. That's good. 13. I'm taking a little profit off into this pop, having just been, you know, kind of break even on the trade. Not getting a lot out. I'm putting orders on the ask. I've filled half. Okay, there's another little surge. You know, so you're seeing little waves of momentum. $97. Okay, so now it's coming back down, and there's that, look at that drop. And that's why you don't want to be holding the whole position. Sometimes people say, Ross, why don't you just hold the whole position with a trailing stop? If you just hold the whole position with a trailing stop, you know, you could have gotten that whole move. But then with the trailing stop, you're always selling when it's coming back down, right? And in a case like that, if you're holding the whole position, you might not get, now it's dropping. So you're hitting the bid, you're getting slippage on the exit. It's clear that the tide is now changing. So the big bids that might have been there to buy dips, well, now they're going to be gone because now it's rolling over. I wouldn't be as confident buying dips. And so that's really why I want to be scaling out as it's moving higher. And then, you know, I'm happy to consider getting back in, but I just cannot, I can almost never hold full position for a huge move. I mean, unless I'm just, you know, really stepping up and trying to just hit a grand slam, which really isn't a smart strategy because it feels like anytime I do that, it ends up coming all the way back down. All right, so that was a break of the pre-market pivot that turned into a couple more trades. So I don't have as much on that one. I suppose it's just, even though it's a somewhat common strategy, I think a lot of them end up, the live examples end up going into one of the other setups, break at the pre-market high or first pullback. So the pre-market pivot to technical level, you'll want to be aware of it, but it really goes pretty closely with the break of the pre-market high. It's essentially your way of getting an early entry before we get the break of the pre-market high. Okay. So with that, we're going to continue on with Chapter 7, Setup 4. All right, so now we're going to talk about half dollars and whole dollars. You've heard a little bit about this. This is very common that trades occur around half dollars and whole dollars, both in terms of half dollars and whole dollars because they're psychological areas of resistance, being the pre-market high or pre-market pivot or a first pullback right around that level. But it also can be a place where I can add, because if we break that psychological level, then I can put my stop just on the other side of it. So Chapter 7, Setup 4, half dollars and whole dollars. This is just the setup that we see so often. The pop up to the half dollar, whole dollar, consolidation above it, then a break through it. So what's the deal with the half dollars and whole dollars? Why is there this so much psychological battle around these areas? I mean, I think it's just the fact that a lot of people, when a stock is at $3 or it's at $2.99, if it can break 3, that seems like a very significant achievement. And if it gets above 3 and then it gets above 350, then the next logical kind of target is 4. And these lower price stocks just really trade with a lot of respect to half dollars and whole dollars. It's just the tendency to kind of round up to the next level. Profit targets often go around these levels for a lot of traders that have been holding for long periods of time. So they'll put sell orders there. Those sell orders help kind of reinforce the resistance that we might see at those spots, and it kind of becomes a self-fulfilling prophecy. So I would say that the whole dollar, half dollar entries are a way of entering a really strong gapper a little bit early and earlier than the correct pattern might allow. So if the correct entry is, let's say, 365, an entry at 348 is early, but it's right underneath the half dollar. And if we break through that half dollar, because we often see as they break, they pop through those levels, then we're immediately at 365. So we already have an extra 14, 15 cents of profit before we actually hit the trigger. Now, the risk of getting in early at any time is that it could go to 355, 358 and drop back down. And then you'd look back and you'd say, well, it actually never triggered the proper entry point. I got in early and then it failed. So if we get in early and it doesn't work, it's usually pretty important to be quick to unwind that position and not just hold it because it actually hasn't given you confirmation yet. So for instance, if the first 5-minute candle to make a new high is at 456, we may enter at 445, 450, knowing that if the stock breaks that critical psychological resistance of the half dollar, it should shoot quickly through 56, thereby giving us an extra 10, 15, 20 cents of profit, whatever it is. And then if it continues to show strength, we could add again at 85, 88, 89, 95, 97, 98, 99 to anticipate the breakthrough the next whole dollar of 5. Now, certainly buying into a possible resistance level is risky because if it doesn't break, it might hit that level and then fade right off of it. So what are the scenarios where I would be confident enough to start to get in anticipating the break? When a stock is our leading gapper or biggest gainer in the entire market, when the float is under 10 million shares, when there's high relative volume, when everyone is looking at it, because that's when you expect that exuberance, those big moves. Ideally when we have a catalyst, some type of news, for sure. So, I wouldn't be doing this on any old stock, but on the right type of stock, it can work well. But there are also times where you'll see me buy like at 98, 99, and then there's that ceiling like you saw in SRNE, the example from a couple days ago, 600,000 share seller at 10. And it could not break through that level, and it faded. Sometimes when we're trading a gap and go stock or a stock like BPTH that just goes higher and higher and higher and higher, I might start getting in at levels like 13.95 for the break of 14, then adding at 14.50, looking for the squeeze of 15, adding at 15, then the squeeze to 15.50, adding at 16, and then it goes to 16.10, and then drops right back down to 15.25. So sometimes I will end up finding that I added too high, but generally for me, half dollars and whole dollars are logical places to start adding and then also to start thinking about taking profits. So usually it's very common for me to add, take profit, add, take a little profit, add, take profit. So I, sort of book some profits as it's moving higher. I move some profits off to the side. And then at the same time, that's the positive. But then the negative is that my cost basis keeps going up. But my share size is not growing and growing and growing because I am taking some profits. So let's see. However, be mindful that it's not uncommon to see resistance at these levels. The only time I'll be adding and adding and adding is in a hot market on a stock that meets all of our criteria for having the potential to make a big move. Sometimes when a stock is surging up quickly because it's just broken out of a pattern or it just had breaking news that came out pre-market or even during regular trading hours, an entry near $0.50, such as $4.50, can be a good place because if it does break that level, then the stop is usually $4.48, $4.49. If it immediately rejects, jump right back out, maybe $4.30s, $4.40s exit. But if it rips, then we're looking at $4.75, $4.80, up to $5, and I can continue to add to the winner. Adding to winners, not to losers. During parabolic price action, so that's that sentence there, during parabolic price action, I'm likely to take positions near half and whole dollars with stops on the other side of that critical level. We'll discuss this more in the momentum chapter. So now the target. Well, the target is typically a continuation for another 15, 25 cents, but most importantly, it has to hold over that level. So you've already seen so many examples of me talking about, $4.10, $3.10, $5.10, $7.10. It breaks over the whole dollar. It straddles it for a second. So it breaks above it, it dips below it. That's not uncommon. So usually in that scenario, the stop would be like 10 to 15 cents below. So if I'm in at 95, stop is probably like 85, 15 cents below the level. It might go to 505, then back down to 89, then rips up through 505 and it breaks 510. Then that's showing that we're breaking away from that $10 whole dollar and it's showing that it's holding that level. So a possible add over 1010, next target up to 1050. If it breaks 1050, it might go 1055, then dip down to 1048, 1042, then pop through 1055, now 1060, 1070. Now we're holding that 1050. We're looking for a move up to the next level, 11. So these prices, they can sometimes be a line in the sand for a tug of war between buyers and sellers. So a clean, convincing break is what we usually look for. When it starts to get choppy, usually that's when I want to start to steer clear and step back. A risk factor, half dollars and whole dollars are psychological levels of resistance. So when they do break, the break is quick. However, there are times where we see lots of buying, lots of accumulation, and then it flushes. It doesn't break. And so if that's the case, then we usually want to be getting out quick. You don't want to be rushing to the, I think of George Costanza, rushing to the exit. So let's see, George Costanza fire exit. Let's see if we get the, I think we're gonna get a good clip of this. So you don't want to be George. Get the heck out of my way. He's knocking over toddlers. But that's the rush to the exit. All right. Everyone's trying to get to the exit, and so you want to be essentially. You look at Grandma taking the tumble. You just don't want to be the first. You don't want to be the last one rushing to the exit. You want to make sure that you're quick to jump out. So how do we smell smoke, so to speak? How do we identify those possible signs of weakness? And that's where we're going to be seeing that generally on the level 2. We may see it in a topping tail. We may see it on a candlestick, but we'll usually see it first on the actual level 2. So a big seller or what looks like a hidden seller or a quick break and then a drop back down, and then that's definitely possible. Wendy, thank you. Let me make a note on that. So slide for, let's see, 560. Okay, right there. All right, so thank you for that. I'll go back and check that. So in a hot market, this can work really well, but in a cold market, this can be almost just not even worth it in a cold market. So, here's an example, pre-market high at $4. Actually, pre-market high of 4, and then it right before the bell rips up to about 420, but $4 was that psychological spot. So actually, that's not the perfect example, but you can see how the pre-market high was 4, and it broke at pre-market as volume started to come in right before the bell. Here's another example. Let's see, we've got $2 down here, but then up here, we have a little bit of a break back over 250. That candle right there is the break back over 250, and then the surge here, pull back, and then the first 1 minute candle gives us a break back over 3. So we've got the setup right here, which is the break back over 3. So that ends up being a pullback where it hit, I don't know, like 305, it pulls back, then it rips up to 330. This one back here, it pops up, it pulls back, first 1 minute candle, pops over 250. This is that example on ACB of why we don't typically, why we at least want to be very careful holding from pre-market into the open. But right there, a nice 1 minute pullback, break through the whole dollar, which is 15. So that breakthrough $15 there, psychological resistance, pops through that and rips up to 16, and it surges right through 16 all the way up to 1660. Drops down, comes up and hits just under 17. So in this case, there could have been an opportunity to buy this at like $15.95 for the break of 16, stop 10 cents down. This is a hot stock at that moment. Maybe it was the leading gapper on that day, I don't recall, but that gave us a possible opportunity there. Here's another one. This stock, a little higher price, it squeezes up, not really a gap and go in this specific instance, but that's okay. It's a $0.5 whole dollar. Taps 26, double top, pulls back, pops up, breaks through it, dips down, rips then through 26 to 27. You could have bought it $26.95 for the break of 27. It goes through 27 up to 28. You could have bought it $27.95 for the break of 28, and your stop is 5-10 cents. Maybe a little bit bigger if this had a bigger spread, but again, up to 28, up to 29, up to 30. So this is one of those times where I'm averaging up, adding for the break of that level, and then taking profit. In some of the live trading archives that are going to be in chapter 11, you're going to see what I would call that flow state of trading, where I'm adding, selling, adding, selling. I'm just so in the zone of riding those waves, the tide, as it's rolling in. This ends up halting down once and coming all the way back down from 30 back down to 26. Clear consolidation here under $0.5. So again, in this scenario, we've got two setups at once. We've got a flat top breakout, we've got a little bit of a pullback, we've got a pre-market high, and we've got the $0.5 whole dollar. APOP, $0.5, $7.50. Pre-market pivot was down here. CAAS. So in this case, so let's see, $9.50 whole dollar pullback, then a breakout. So that was right here. Tapped $9.50, pulls back, then into the close, surges through that level and higher. So that one's, again, a little later in the day. It looks like pre-market, it was struggling right at about $7.50, which was the open price. So it was above it, below it, above it, below it, above it, below it. So it kind of struggled there. This one also shows you a fade off the VWAP once, a break of the VWAP, and then a break back below it, a fade off the VWAP, a break of it, a break back below it. And then this here is kind of like a pre-market pivot, that 681 level. Because if it breaks there, your next target is this pivot. And if it breaks there, your next target is the high. And so you kind of have that pattern there that's sort of similar. So a question there about how do I get out so quickly? It's hotkeys. That's what it is. It's hit the bid with a hotkey if I have to, or sell on the ask. But it's absolutely the hotkeys. On this one, this was a break of the volume weighted average price, and I just got in at $9, the whole dollar. Was it aggressive? Yes. But it was a break of VWAP setup, and that was really kind of the only, I mean, if I waited for the pullback, it would have been here, and then I missed the whole move from 9 up to 1080. So that was a really nice squeeze. Squeezed into a halt, second halt, and then surges higher, drops, curls back up, second opportunity here, another halt, maybe not, but anyway, surges higher. Again, that one doesn't happen to be a gapper, but just the whole dollar, $0.5 concept. BTBT. Hits 8, taps it, pulls back, up to it, hits it, pulls back, curls up, breaks through it right there. Gets above it to 10, 8, 10, hits that same level, then dips back down. So Steven says, does anyone know if this is a true statement? You can buy or sell on the ask, and you can also buy or sell on the bid. It's a true statement, and I'll show you just as an example of it here. Well, I don't know. I don't want to do a live trade, I guess, but I could pull up the simulator, but yes, it's a true statement. And sometimes this gets a little confusing just because of it's a little confusing initially, just that there's even two prices. There's a bid and an ask, not just one price. So here on the bid, we've got 62.25, 29. I'll just put an order at 25. So I'm a little bit below the bid. So I'm trying to buy there. Now by putting my buy order there, I'm actually adding liquidity. New buy order, I'm going to put it at 60, and I got filled. I bought at 59. I got filled as it dipped down. New order is at 50. If it dips down a little more, I got filled some more. So I'm buying the dips, adding more at 615 on the bid. I'm only buying on the bid right now, but I'm getting filled only as the stock is dropping. So, we don't always, that's not always what we want. That's not actually never what I want. I'd rather be buying as it's moving higher. So alternatively, so as we can buy on the bid, I can also sell the whole position on the bid. As you know, I can just sell right there. There's a buyer at 53, and I can say, boom, sell, 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 sell. Sold to him at 53. Now I can switch gears. If I want to buy on the ask, I can buy at 41 or 61.40. I can buy more at 69. My average is 21.12. I can add more at 93. I'm buying at the ask. My average is 61.05. This is a stock that's so volatile in this heartbeat, you can lose tens of thousands. So adding more at 61.35 here, and now my order to sell, also at the ask, will be 55. There we go. Some of that order filled. Let's see if more of the order fills up here. Order at 90. So putting my orders out to sell on the ask. So we can do that. And the reason I'm able to trade as quickly as I am, whether it's in the sim or with real money, is hotkeys. Average is 61.40.24 with 13,000 shares. It's a big position. So, you know, we would probably want to see this break through 62 pretty darn quick. Could put the order out, maybe to take profit if it does, but certainly might not. So, yeah. So we've got BTBT there, break of 8, hits 810, pulls back, and then gives another move. This is an example of buying into whole dollars. So this stock squeezes from, well, we can look at the 1 minute, from 550 all the way up to 850. So if I added for the break of 6 and then it goes right into a halt, not bad. Then it opens higher, I add again at 7, it goes into another halt. It opens higher. Now after the second halt, maybe now I want to take some profit. So I take a little profit off the table, which is going to generally be the right move. It goes a little higher, it halts going up again. Then it opens, after the third halt going up, it opens and actually halts going down. Opens lower, and then it starts to curl back up and ends up going back up to 10. And so a lot of these trades, in sort of in the absence of a more obvious pattern, but on a stock where I want to try to capitalize on clearly what is volatility, my entries will be at half dollars and whole dollars. This is aggressive, obviously. Buying just as something squeezing up at the nearest half dollar, whole dollar is aggressive. In a hot market, it can work. And so we talk about it certainly as its own standalone setup, but also maybe even more importantly, when it's overlapping with the break of the pre-market high, or the first 5-minute candle to make a new high, or a flat top breakout right under that critical level. And you'll begin to see how stocks trade at these half dollars and whole dollars. And you'll realize that these are important levels to be watching. Okay, so let's see. So here's a live trade, so let's take a look at this one. Oops. Okay. So on this one, I'm going to buy at 295 for the break of 3. And it looks like I have 2 trades on this. Okay, so this is one of those days where our leading gapper looks like BLIN up 117%. We've got about 2 minutes to the bell here. And another gapper is up 26%, RSLS, which is not as big, but I believe this one has a lower float. So I've got these 2 that I'm watching, and they're both at the same price. Now, this can be a little bit of a recipe for disaster because sometimes when you're watching 2 stocks that are both the same price, you can get confused, and you start to think one's the other, and it can be bad. So I never really love when this is the situation, but it is the case. So here's the bell. Now, neither of them are easy to borrow. I believe they both have lower floats. This one has more volume, BLIN, and is the larger gapper. You can see with the yellow bar around this window that that's the one that is in focus. So this is the RSLS chart right there. Oh, we've got another one down here, SMMT. All of these are in the same price range. So now RSL or BLIN, you can see has a pre-market high of about 325. And it's kind of been stair-stepping down a little bit. You know, not the absolute cleanest chart we've ever seen. But of course, the whole dollar being what it is, we're starting to see volume right there. That burst of volume, and I'm in at 95. Immediately having a seller dip down at 90 is not good. I'm going to need to keep a pretty tight stop on this. That appears to be a hidden seller. So see how all of a sudden we're kind of pinned right there? So let's back that up and look at that again. It looks like it's about to break, and then all of a sudden it drops down to 90. So what probably happened is someone had a limit order to sell at 90. And it was a big enough position that the stock dropped down to 90, and now their order is plopped there at 90. So right there, all of a sudden on EdgeX, it drops down. Now it's only showing 100 shares. Now the stock is not going to drop down on 100 shares. So that is a hidden order. Watch it again. And right there, it's dropping down. And look at all those sell orders. It's just locked right there. Look at all those buy orders that went through at 90 and it's not breaking. Yes, okay, I'm looking. Hi. Yeah, I'm just looking at the chat feed here. Okay, yep, sorry. There's just a question there about schedule. Okay, so BLIN, so 285, 290. All right, so there's a hidden seller there. It looks like at 290, 289, 290. There's buyers going through, but it's not breaking that level, right? Now I'm in two stocks at the same time at almost the same price. This is usually not a good idea, but RSLS, a little bit of a stronger chart. Looks like it's curling up, and I'm in it at 94. To anticipate the break through that level. Now here BLIN is popping up, so now we've got two, and this is, you can imagine why this is so difficult to be trying to trade two stocks at the same time. This is not easy. So on BLIN, I took it off the table and sold it at 98. I said, you know what? I don't like how we had that seller there. I'm taking it off the table. I'm just going to cut it loose, and I'm going to focus on RSLS. Well, lo and behold, BLIN ends up breaking through 3, going to 309, and RSLS, well, ends up being, well, there it goes. Now RSLS is going. Golly, what a day. So I sell that one, $500 between the two. But geez Louise, now this is back at 280. This is back at 290. So neither of these ended up being really clean. Probably this is a situation where, because you had, usually I do better when there's one really obvious stock. When we start to trade like 3 or 4 stocks at the same time, attention, you can tell in the market is just kind of dispersed across too many stocks, and we don't see the cleanest follow through in any one of them individually. So for that reason, you know, on BLIN and RSLS, neither of them ended up working out as well as one of them might have if it had been the only one in focus. But those were two quick little examples of break of $0.50, whole dollar, which were small gains on both of them with relatively tight stops, but neither were really huge winners. So here we have break of $0.50, which is the pre-market high, and I think that this actually may be one that we've already looked at on IO. So let's just full screen this. But again, just to reiterate, yep, so this is the one that we're going to be looking at, the break through 350, the $0.50. Pre-market high is 347. So pre-market high is just under that $0.50 level. So it is at the same time a pullback, first 1 minute candle to make a new high. It's also a break of the $0.50. It's also a break of the pre-market high. Boom, 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 right there, long for the break of that level, and that's a clean one. That's a clean break at the pre-market. That's a clean break, and part of it is because it's probably the most obvious stock on this day. It's everything just lines up with several setups at the same time that becomes a cleaner trade. Stop is at 47, logically. Target now, $4. Possibly adding at 88, 89, right? Let's see if we can add here for the break of 4. Okay, it taps that level. We've got resistance at that level. Now we let it pull back, come back up for the second attempt. So we're going to let it come back up here for the second attempt for the breakthrough. There we go, 94, 95, 97. Okay, taps. Now we have 2 taps. Let's look for it to come up, third try, and the breakout. Sometimes it needs a 4th try. Sometimes it's a 5th try, but if it keeps trying, eventually it breaks, and there's that snap through that level. Nice trade. That was a much nicer trade. All right, another one here. Oh, no, and those are the 2. So in Chapter 8, we're going to have some more examples of the break of the pre-market, the break of the $0.50 and whole dollar. And also when we get into Chapter 11, you're going to see a lot of live trading examples that are in that flow state where I'm trading in and out of those levels. All right, let's continue on here. Chapter 7, Setup 5.